Well, the Nigerian equity market is up 20% so far in 2013. In the context of the strong rally, which stocks are overpriced and are the high relative prices of multinational companies justified? To find out how pension fund managers are investing in the current market, we're joined in the studio by Dave Uduanu. He's the CEO of Pensions Alliance. His company currently has over 100 billion naira under management. Dave, it's great to have you on the show today. And obviously, I mean, you represent the fund managers in this market these days. A lot of people have talked about what you guys are doing, being very critical to where this market is going. So I want to first of all get your thoughts. We've seen the market up 20% for equities. Fixed income market has also rallied quite a bit this year. How are you investing in this context?
Thanks. We're seeing a movement from fixed income to the equities market. There's a yield compression going on in the market, fixed income market. Yields have dropped from 6.5% to about 10% this year. So obviously managers are moving their allocations, increasing allocations to equity from the lows of 5% last year to maybe about 15% this year. The fixed income market, we see yields coming down, even below 10%, based on the strong macro numbers and the global portfolio flows, inclusion of Nigerian bonds in some of the global indices is also driving, allocation into this market. Okay. On the equity market, the market is up 20% this year. I mean, it's some of the stocks there are looking fully priced. But, there's a strong case for the Nigeria, equities market. It's trading at a PE of 11, and dividend yield of about 3%, but forward dividend yield of up 5%. So we're increasing our allocation to the equity market and reducing allocation to the fixed income
Sticking with that discussion around whether or not companies are overpriced, your thoughts about the multinational companies that seem to be the favorites of many of the foreign investors? I'm talking about the likes of Nestle, Nigerian breweries, Guinness. A lot of people saying that these companies are way overpriced. Do you agree with that view, and do you think there's any justification for those stocks trading at the current values?
Well, those stocks, we look at those multinational stocks as defensive stocks that are a must-have in any institutional portfolio. They are trading, Nestle and Nigerian breweries are trading at PEs of more than 30, which looks very expensive. However, if you look at Nestle, it's a solid quality company. Most of the foreign portfolio managers would like to have Nestle in their portfolio, and therefore that's one of the things that's driving the price of that stock. Is it going to deliver value over time? I doubt it. I mean, it's not. Nestle is not a buy today. It's probably at best a hold. Nigerian breweries is another good pick. It's a big challenge. The thing with Nestle and Nigerian breweries is that they are delivering strong performance numbers, return on equity on the average of 60%. So I'm not sure that fund managers are still bullish on those stocks. I think that what you do is that you look at those stocks, the prices come down, you buy them at a good valuation and you hold them on your...
So I imagine that you're looking to overweight in the banking sector, because I think some people still say there's a lot of value there.
Yeah, there's a lot of value in the banking sector, particularly tier 1 banks. Nigerian banks trade at PE of 10. They're growing the profits top and bottom line at 20%, 30%. Dividend yield is 4%. We particularly like the big banks. GTB and First Bank. We also think that banks like Access Bank and UBA are beginning to look compelling, in any because if you look at Access is valued at a third of GTB, but the profit is about half of GTB. So there's obviously a valuation mismatch between GTB and Access. Having said that, GTB is a quality name that, again, is a must-have in every institutional investor's portfolio. Right. Nigerian banks are also growing on the back of low penetration levels, about 26% of GDP, which obviously means that, if you look at it in 4 or 5 years' time, based on today's earnings, they'll be trading at forward PE of something like 5, which is compelling.
All right. So, of course, as a long-term investor, I imagine that that's what you're focused on, the long-term value of these companies. But final point, I think a lot of people know that, look at markets like Ghana, for instance, the activities in the pensions industry is having a significant impact on that market. A lot of people are expecting the same to happen here, even though right now it's still dominated by foreign investors. Can you speak to some of the reforms that we've heard about in terms of the investment regulations for pension funds, and how you think that is going to impact this market going forward?
Well, the key reforms, the reforms that allow pension funds to go into alternative assets, private equity, infrastructure, and real estate. We are seeing a lot of interest in that. However, the instruments and the assets currently don't exist in any scale to require significant allocations of pension monies. The other key reform is a multi-fund structure, which allows pension funds to create funds that are aligned with the demographic structure of the
that hasn't kicked off yet. What's the likely impact when it does?
Well, when it kicks off, you find significant allocation to equity markets. However, you have to be careful because the market, very quickly becomes overpriced. So I think that, the rally we're seeing in the market will be sustained based on those two things. The multi-fund structure will start sometime this year. And therefore, we're looking at the market doing up to 30% this year on the back of, the significant interest from domestics, the institutional investors like pension funds, and also the retail investors who are coming back to the market.